Hi everyone, welcome back. Today I'm going to discuss about a strategy using Supertrend. So obviously it's a trend following strategy, and I'm also going to use Heikenashi candles here. And I've done the backtest for about last 5 years of data on both futures and options. So we'll talk about that also. But before that, let me show you the rules of the strategy. So in this, basically what I'm doing is I'm using Bank Nifty, and I instead of using the normal candle, I'm using the Heikenashi candle. So let me create the Heikenashi candle. This is the Heikenashi candle, and as we know, Heikenashi candle is a generally helps us to get a good trend, right? Because it does not keep giving us a lot of red and green candles. So let me add in the indicators. What I've done is I've just used a single indicator, Supertrend, and I've used 7,3 for our testing. So let me change the inputs to 7,3. So that is those are my inputs. Now what I'm doing is I am taking a trade. I'm taking a trade when, let's take an example here, right? So we have got a green candle, here, but I am not going for an entry on this candle. I am waiting for the high to get broken. So once the high gets broken of the Heikenashi candle, when I am on a green super trend, I will go for an entry. So this is the price at which I will buy Bank Nifty. As you know, this is the right price. The high price is the correct price, but the closing price is not the right price, right? Because if you know the calculation of Heikenashi, if it's a green candle, you will get the high price as the correct value. So I'm going for the entry here, and then I have to keep a stop loss. So I'm keeping a stop loss of 0.25%, and I'm putting a target of 1.75%. So 1:7 risk to reward. I was trying with 1:8, but 1:7 was giving me a little better results than 1:6 or 1:8. And then what I'm doing is I'm waiting either my stop loss to get it or my target to get it, or in if neither gets it, in that way what I will do is I will wait for the Heikenashi to turn red. So in this case it turns red here, and I will exit at the closing price of the normal candlesticks, right? So this becomes my trade, and in this example, it's a loss-making trade. Let's take another example. So if you see here, I get another trade here, this time a selling trade because it's like an Ashi candle and the low has been broken. So I will go for the selling trade at the low of the candle. This is my selling trade. I will again put my stop loss and target, and again in this case, I will get stopped out on this candle. But now see one benefit. If you see here, the third trade, I actually don't get an entry because the high of the candle was never broken. So a lot of times what we have seen is that there is a lot of whipsaws in super trend, especially in sideways market, and you can clearly see that if we use this high break, we can get rid of these extra trades. And in this case, I will not get this third trade. I will not get the third trade. In fact, I won't even get the fourth trade. No, I'm getting the fourth trade right over here, right? Because the low got broken. The low got broken here. So I will go for the selling trade here, right? So this is what I have done on a Heikenashi candle, assuming that since super trend is also a trending indicator and Heikenashi also gives us good signals on trending market, this might work out. So let us see the backtest results on the Excel now. So let us look at the results now. So I have backtested this strategy for almost 4.5 5 years, since 2019. I've got the entry time, the entry price, the direction, whether it was a buying or a selling trade, the stop loss, target, and the final exit price. So this is the dashboard with a 0.01% slippage. As you can see, the results are not that appealing. It's making an ROI of 51%, but the drawdown is also pretty large. It's about 57%, giving me a CalMAR of less than 1. And if you notice the cumulative PNL here, the last 1.5 years has been really bad, right? Because it's almost flat. That means we are not really making profit, and it has a really long drawdown phase, almost 200 days. So with 7 months of drawdown, it's extremely hard to trade a strategy. It's probably with the low VIX environment, and that might change. So let's say if the VIX is high, maybe the strategy works again. But during the current regime, the strategy doesn't seem to be working. You will also notice in the monthly PNL that there lately in the last 1 year, there has been a lot of red bars, which means that the months have been loss making, which again tells me that this is not a great strategy, not too much appealing. So what I did was, as usual, I went ahead and tested it on options as well, as at the money option selling. That means whenever I was getting a buying trade, I was shorting at the money put, and if I was getting a sell trade, I was shorting at the money call. Let's see the results. And very similar, as you would notice, the returns have definitely gone down, and this is probably happening because this is a trend following strategy, and when there is a big trend, I, as an option seller, I'm not really making that much money. So that can be one of the reasons. But again, the results are very similar. As you can see, in the last 1.5 years, there has been absolutely no return, in fact negative returns. So this again, even with option, this is not really giving me any benefit or any edge. So I would say from my preliminary testing, that Heikenashi plus Supertrend actually is not working, even though I tried to use both very trending tools, but the combination is still not working. Anyway, you can go ahead and test it, and I'll see you in the next video. Thank you.